Thank you for joining me for the beverage alcohol industry market analysis for March 2026. Key events. The most significant development in March 2026 is the potential blockbuster merger between Pernod Ricard and Brown-Forman, which would create a combined entity with approximately $15 billion in annual sales. Multiple sources characterize this as a defensive consolidation in response to a contracting spirits market, declining consumption patterns, and emerging competition from cannabis products. This merger is being facilitated by a dramatic shift in U.S. regulatory policy under FTC Chairman Andrew Ferguson, whose administration has lowered regulatory barriers and enabled a surge in M&A activity across multiple industries including spirits. The deal represents a strategic response to fundamental market pressures rather than growth-driven expansion. Regional market data reveals mixed signals across the industry. Oregon wine production is projected to exceed 6 million cases in 2026, with the top 7 labels averaging prices above $15 per 750 milliliters, demonstrating resilience after successfully navigating the 2020 Cascade wildfires, pandemic supply chain disruptions, and recent inflation. This achievement highlights the premiumization trend gaining traction in wine markets. Meanwhile, the North American alcoholic drinks market is valued at $415 billion in 2025 and projected to reach $470 billion by 2032, representing a modest CAGR of 2.18%, indicating mature market dynamics with limited growth potential. The RTD, ready-to-drink cocktail segment emerges as the industry's clear growth engine, though reported market sizes vary significantly across research firms. The segment shows growth from approximately $1.9 to $3.93 billion in 2025 to projections ranging from $4.36 billion to $8.4 billion by 2032 depending on the source, with CAGRs between 11.45% and 13.31%. One particularly bullish forecast projects RTD canned cocktails reaching $115.2 billion by 2035 with an 11.4% CAGR from a 2025 base of $38.7 billion. Despite methodological variations, all sources confirm this as the fastest growing alcoholic beverage category, driven by consumer preferences for convenience, premium experiences, and innovative flavor profiles. Specialty spirits categories are showing strong momentum. The mezcal market is projected to grow 2.1 times between 2026 and 2036, with Joven Mezcal commanding 76.1% market share and Espadin Agave dominating at 83.3% of sources. The U.S. remains the largest market for mezcal, reflecting American consumers' growing appreciation for authentic premium spirits. Industry recognition events including the Beverage Testing Institute's 2026 Vodka Awards, BevTest's highest-rated tequilas and agave spirits, and the Rum and Cachaça Masters 2026 highlight the quality improvements and diversification across spirit categories, from luxury Latvian vodkas to innovative Texas-flavored expressions. Global market projections indicate steady but unspectacular growth. The worldwide alcoholic beverage market is forecast to grow from $403.46 billion in 2025 to $425.69 billion in 2026, reaching $689.82 billion by 2035 at a 5.51% CAGR. Market composition remains stable with beer dominating at 48%, spirits at 28%, and wine at 17%. The spirits segment specifically is projected to grow from $152.94 billion in 2025 to $160.53 billion in 2026, 5.0% CAGR, reaching $200.49 billion by 2030. These moderate growth rates reflect mature markets in developed economies offset by emerging market expansion, particularly in India, where urbanization and a growing middle class are creating new opportunities, despite regulatory and socio-cultural challenges. Patterns premiumization emerges as the dominant strategic theme across all beverage alcohol categories in March 2026. From Oregon wines averaging above $15 per bottle to mezcal's authentic positioning, RTD cocktails emphasizing bar-quality experiences, and craft spirits gaining market share, companies are consistently moving upmarket. This trend reflects both consumer willingness to pay for quality and producers' need to maintain margins in a low-growth environment. The pattern extends across beer, wine, and spirits, with premium and flavored products identified as key growth drivers in multiple market analyses. This premiumization strategy appears to be a deliberate response to volume declines, allowing companies to maintain or grow revenue despite flat or declining consumption rates. Convenience and innovation in product formats represent the second major pattern, particularly through RTD and canned cocktails. The explosive growth projections for this segment, 11 to 13% CAGRs versus 2 to 5% for traditional categories, demonstrate a fundamental shift in consumer behavior toward pre-mixed, portable, and accessible drinking occasions. Multiple reports cite packaging innovations, flavor experimentation, and natural ingredient preferences as growth catalysts. This pattern suggests consumers are trading traditional on-premise experiences for convenient at-home or outdoor consumption, accelerated by pandemic-era behavioral changes that have become permanent. The emphasis on bar quality in RTD products indicates consumers still desire premium experiences, but want them delivered with maximum convenience. Digital transformation and e-commerce expansion appear as consistent enablers across categories. Multiple reports cite online sales growth, digital channels, and strategic collaborations as key drivers, with trade tariffs influencing companies to pursue localized sourcing and adapt supply chains. The integration of AI technology, as evidenced by ingredients partnerships with Shiru and Holobiome for ingredient discovery, signals that innovation is increasingly technology-driven. Distribution channel diversification is evident across beer, wine, liquor stores, supermarkets, and convenience stores, with Horeca, hotels, restaurants, cafes, accounting for over half of mezcal distribution, indicating channel strategies vary significantly by product category and target demographic. Defensive positioning dominates corporate strategy in March 2026. The Pernod-Ricard-Brown-Forman merger exemplifies consolidation as a response to market contraction rather than growth opportunity. Investment analysis consistently emphasizes dividend reliability, stable returns, and resilience during economic downturns, rather than aggressive growth prospects. Multiple articles frame alcohol stocks, LVMH, Diageo, Constellation Brands, Coca-Cola, as buy and hold forever investments valued for defensive characteristics and steady cash flow, rather than capital appreciation potential. This pattern reveals an industry in mature decline in core markets, seeking scale efficiencies, geographic diversification, particularly India, and category migration toward faster-growing segments like RTD cocktails to offset structural headwinds from declining consumption and cannabis competition. Market direction. The beverage alcohol industry is entering a period of structural transformation characterized by bifurcation between declining legacy categories and emerging high-growth segments. Traditional spirits, beer, and wine markets in developed economies face persistent headwinds from declining consumption, cannabis competition, and changing consumer preferences, driving defensive consolidation like the Pernod-Ricard-Brown-Forman merger. The industry's future growth will increasingly depend on successful execution in three strategic areas: premiumization to offset volume declines, innovation in RTD, and convenient formats to capture changing consumption occasions, and geographic expansion into emerging markets like India. Companies that can simultaneously defend legacy portfolios while building positions in high-growth segments will outperform those committed primarily to traditional business models. The RTD cocktails category will likely emerge as the industry's primary growth engine over the next decade, potentially cannibalizing traditional spirits and beer occasions while expanding the overall market through convenience and accessibility. The 11 to 13% CAGR projections dwarf growth rates in other segments, suggesting a fundamental shift in how consumers approach alcohol consumption. This creates strategic imperatives for established players to acquire or build RTD capabilities quickly, explaining why major spirits companies are emphasizing innovation pipelines and packaging advancements. However, the wide variation in market size estimates across research firms suggests this segment remains immature with uncertain competitive dynamics, creating both opportunity and risk for early movers. Regulatory environment shifts under the Ferguson FTC administration will likely accelerate industry consolidation through 2026-2027, enabling scale-driven efficiencies but potentially reducing innovation and competition. Companies should expect continued M&A activity as mid-sized players face pressure to either acquire scale or be acquired. Geographic diversification into emerging markets will become increasingly critical as developed market growth stagnates, requiring companies to navigate complex regulatory frameworks and cultural differences. Investment in technology and AI for product innovation, ingredient discovery, and supply chain optimization will separate leaders from laggards. The industry is transitioning from a growth paradigm to a value optimization paradigm, where success depends on portfolio premiumization, operational efficiency, strategic M&A, and selective innovation in high-growth niches rather than broad-based volume expansion.